The tax plan is here. With many doubts, investors cheer. But bonds fall hard. Those investors kicked in the rear. And small cap stocks, oh dear, show absolutely no fear. More about all that when we start the show.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market marched upward again this week with small cap stocks taking the lead. Any quick dip that came during the week, mostly those happened during the first hour of any session, well, those were quickly met with buyers. The major indexes mostly moving up close to or to new highs. The NASDAQ and the Dow Jones Industrial Average just missing by a little bit, but we saw the S&P 500 and the Russell really surging, and we have some divergence there, but overall we can see still a lot of strength in the market. Stimulus came on leaks that President Trump was going to release his tax plan early in the week. They're cutting taxes certainly for the middle class, corporations, eliminate some deductions, but doubts are high about whether or not that can pass. And in its present form, there are certainly some Republicans that are going to push back, and they will get absolutely no Democratic votes as the war between the parties continues. It may be a similar battle to what we saw during healthcare, but investors, they actually don't care. They look well into the future, and they're essentially seeing nirvana through the clouds. Nirvana being corporations that pay less taxes and get stimulus from being able to bring money in from outside of the country that's been sitting out there pooling some $2.5 trillion. So investors, they see something way out there that, well, a lot of people like technical analysts like I am don't really see looking that far out. So a market that looks really strong, and hopes are all pinned on the fact that eventually the Trump policies are going to get passed, and it's going to be major stimulus for the economy. I don't know. Do you think that's true? When I look at this tax plan, overall, there are some benefits to it, but it's certainly not overwhelmingly stimulating in the fact that it actually builds deficits, and while you're building deficits, you're not really repairing the issues that we have in this country. So I don't know exactly what investors are seeing, but they're seeing something awfully sweet out there, and the question is, are they right? Let's take a look at the stock market for this past week as we look at the 60-minute chart of the S&P 500. You can see in here, look at those that little up channel that we have put in there. It's pretty clear that the market has been churning its way up all week long. There was some news overnight that got the markets weak in here on Monday. You can see that. Merkle wins with a weaker showing. Apple tells their suppliers to slow down deliveries. That was weighing on the NASDAQ. Target says they're going to raise wages to compete with Walmart and cease $15 minimums by 2020. So that's wage inflation potentially showing up. Dudley sees inflation restraints lifting from the Fed and talks about more hikes. And North Korea, Kim says that the U.S. has declared war and now can shoot down the U.S. plane. So that had the market weak early on Monday. You can see that, but buyers came in, as seemingly happens every day. The tax plan was released here on Tuesday, and the markets liked it for a few minutes, but then started to sell off, but buyers came in again. Yellen spoke that day, talked about inflation and policy, and she says she's been wrong on inflation. Inflation is low and could slow down the pace of hikes. And then she turned around and said to be wary of raising too slowly, even with low inflation. So I got a lot of question marks when I hear that, because it's total confusion. And there is talk now about whether or not Yellen is going to be reappointed. And you know me, I certainly hope she is not reappointed, because this Keynesian stuff is eventually going to get to kill the economy again, like it's done time and again. So we need academics out of there, and we need some people that really understand the true economics and business to be in there. So we'll see who we can get. I want Yellen out. Tax plan is at this point leaked again before the speech actually comes. Bonds crack 1.5%. Talk in a moment about why that happened, and the dollar jumps. So the Russell 2000 at this point, buyers start to come in, and it explodes for 2% on the day, and it lifts all stocks. President Trump talks here in the afternoon about his tax plan. Here you get on Thursday, GDP revised a little bit stronger to up 3.1. Bonds are dropping again. Bonds had a pretty tough week. Fed Fisher comes out and he says it's important to reverse massive bond buying program. That got a little dip in the market there, but you could see what we had was a rally Monday, Tuesday, Wednesday, Thursday, and Friday. Here we are. No real news for the day out there. The president spoke again defending his tax plan, but buyers are in here, and even though the Russell is stalling, if anything, this is a market that is extraordinarily strong, and you can see that as buyers just seem to come in constantly. So that's a look at what happened in this last week in a market that is just astoundingly strong and keeps moving, chopping or churning its way to the upside. So the stock market indexes mostly fractionally higher for the week. Dow up just really a few points. The NASDAQ, the S&P 500 up 0.5 3/4 of a percentage point right now as we come into the last hour of the day. But the Russell up a solid 3% on the week as buyers in the lowest tiers of the market keep coming in. Right now, I have some more comments about that in just a second. The bond market down this week. 30 years down about 1 3/4 points. That happens, interestingly, at just about a week or so after we did a video on with our analysis of the big picture of the bond market, saying that we believe the Fed wants to break the bond market. The yield curve is too flat. They want to steepen it. Without steepening it, they're afraid to raise interest rates because they know that the flattening yield curve, or a flat yield curve, often brings a recession. So they're stuck, and without breaking the bond market, raising longer-term interest rates, they couldn't really be very aggressive raising the short-term interest rates. So they got what they wanted, and part of that was about the tax plan. If the reason for that, and what I think makes a lot of sense, is that if the tax plan comes as expected, then there's a lot of repatriation of the money that's sitting out there outside of the United States. And that money, believe it or not, even though it's outside of the United States, is sitting in treasuries. So were the money to be repatriated, they'd sell off the treasuries and then they'd bring the money back to this country. So that was deemed as bearish for the bond market. That's how the tax plan affected it. So we had this sell-off in the longer term. 10-year notes fell also. The 10-year yields up about 6 basis points on the week. The dollar responded, moving up about a point. A pretty strong bounce for the dollar. We expected that to happen in about a week. We'll show you that in our short-term view. So it came just a little bit early for us. And the reason for that is because money flows to where it can do the best. So if our interest rates are going up, then money flows into the U.S. dollar. The higher yields attract the currency. Other central banks may follow soon. The only one that's really sitting back, and that is Japan, and Abe just called for snap elections. That could potentially slow down their response to what's going to happen in other central banks. We're going to see the ECB and Draghi probably react pretty soon with their taper. So there's going to be a push and pull and fight between the money flowing into the euro or into the U.S. dollar. That should bring a pretty choppy situation. So with the dollar rallying, of course, the gold market fell because there's an inverse correlation to there. We expected that the gold market would get a bounce, and we actually almost bullseyed on where that level would be, but then it turned south as we expected and lost about $13 on the week. Silver down about 24 cents. Oil had a mixed week. It soared on Monday. There was news out that OPEC was doing better, that and likely to extend their cuts, the production cuts, and that the market was getting more balanced. And then came Thursday, there was news that the production around the world was at a 26-month high. So it's really conflicting information. The oil market has got a toppy look to it. We thought it would get just over 51. It traded around 52, and now maybe in for a little bit of correction. Watch the short-term view when we get to that, and you'll get an idea of what we are talking about. So the stock market makes new highs again, and the Russell definitely a leader as the lower cap stocks, the small caps, the really cheap companies, they're the ones that are leading in here. Investors are moving essentially from the high caps, especially high cap techs, seeming that they believe that there's a better opportunity in those lower cap stocks, because of course the NASDAQ led the way. We had these big moves, and now all of a sudden these higher cap techs are floundering. They've got to bounce the last few days, and if you watch our video on Thursday, actually on Tuesday, where we talk about the tech stocks, we thought there would be about a week's worth of rebound, and then they're likely to start moving to the downside again. So the money is flowing out of where it was, parked in these Apples and Amazons and Googles, into some pretty obscure companies that are leading the way up in the market. There was an article that I read that I thought was outstanding by Mark Hulbert, very, very well-known market analyst and aggregator of market analysts, discussing the PE, the price-earnings ratio on the Russell. Made some interesting comments about that. Depending on how you look at the Russell, there's readings out there of 20 to 27 as the PE. Now, historically, that would not seem like an outrageous PE. In fact, the PE on the S&P 500 is around 24, so that wouldn't seem that outrageous. But it is deceptive. And that's because what Hulbert claims is that the Russell, the way the Russell reads it, or the way iShares do with their IWM, they don't include the stocks that lose money. So essentially they're giving you the PE of the stocks that make money, only that make money. And that is a crazy deceptive way, since there's 2,000 stocks in the index. Eliminating those that have negative earnings is really a false picture. 1/3 of the Russell stocks lose money. Losing money. So if you add in all of those losses, the PE actually is much, much higher. The PE, according to Hulbert, at this point would be somewhere near 80 on the Russell. So this is a crazy deceptive reading we're having out there, and I think investors are buying it thinking they're buying value. But with the Russell, you may be getting good companies, right? But you're also buying a lot of crap in there, and they are, I think, making a big mistake. Also, don't forget that the companies that are in that lower tier of the market, they have to pay more, much higher interest rates to borrow money, and interest rates are going up. So that only makes the situation for the Russell stocks worse. Soon the reality of this overvaluation, extreme overvaluation in the Russell, is going to hit home. And history shows that when they start moving into these cheapy stocks, you get to be in the final stage. Thanks to my friend Tony from Mexico, who sent me a great chart that showed that the volatility that we have in the market here in the U.S., measured by the size of the drawdown in a particular year, is the smallest ever. In other words, we have never had a year in the stock market with this small of a drawdown during the year. Of course, we're going now for quite a long period of time without a 3%, let alone a 5% drop. Tell you what, thanks Tony for sending that. Really great looking chart. And it says to me that what's likely to happen is that Q4 here coming up is likely to be a lot more volatile than what we've seen here in the market. In fact, I'm willing to bet that we see something that really feels like a correction here in the fourth quarter. That's the opening segment for the week, and I'll be right back with the best and worst stocks for the week. All right, best stocks for the week. Do this every single week. What we look at is the stocks that had some particularly good moves and the stocks that may be setting up for some good moves. The first one we're going to look at is in both categories, because basically this one was the biggest mover of the 320 stocks that we look at to the upside, and also was a stock that we had for the last several weeks as a stock that we really loved, and that is BlackBerry, BBRY. Take a look at this weekly stock in BlackBerry, which has a solid 20% gain on the week. That is just an outstanding looking chart. I want you to note the cyclicality in here. In other words, these are the cycle brackets. That's the basis for our cycle work. These are just a drawing tool that helps us understand the energetic rhythms in the market. So when it's in a rising phase, generally you get to make a nice upside move. When it's in a declining phase, you get into a correction. So it's really up and down, and up in a big way, and then a big correction, and then it gets into this support buy zone that we've had listed there for a while. And sure enough, that was perfect. It moves up in a giant way. Earnings strong. Their guidance was even stronger. They've signed a good deal with in Japan for software development, and they are just been very successful in changing their model from essentially a hardware company with the BlackBerry phone that had great software, but basically the hardware was not competing, to a company that's moved into software and security, and the stock moves up from 9 to 11. Who says it's not going to be a $20 stock based on this? So I really like BlackBerry. I think it's had a giant move, and I think that given some opportunity on any dips in here, I'm a buyer in that stock. I think it looks absolutely great. Home builders were also big upside movers, contrary to what you might believe with interest rates going up. But inventories are seemingly low. That's overall a good sign for selling homes. And when interest rates start to move up, then buyers start to think, well, I better act before these interest rates get too far out of hand. But with interest rates still 4%ish or so, that's not very crazy. I bought a home, big house in I built it actually in 1987, and my mortgage on that house was 11%. So, and people, yeah, we were coming out of recession there, and people were still buying and building homes. So here, 4% is not all that crazy. It's actually a historically cheap number, and that's why we're getting some pretty good upside moves in these home builders. So KBH was the leader in this group, and you can see in here again, looking at market cycles, the rhythms in the market. Look at how clear this is, just absolutely beautiful. You might note that right over here, where this decline was due in this rally, that you barely got a decline, and that is what we call a right-hand translation. In other words, the right side is where it was supposed to correct of this cycle, and it couldn't. So the right-hand translation is all this rally, a modest little dip, that gives you another big rally, which you saw right over here. It comes right down to the 34-week moving average. Look at the importance of the 34-week moving average. As it touched at all of these times, it does it right over here and then explodes to the upside. A little closer look right over here, and you can see this was the cycle peak. It's gotten just above that right there, and our projected areas are in this fib confluence area, about 25.5 to 26 on the stock. So KB Home, a solid looking stock in there. We're going to look at a few more of these home builders so you can get an idea as they followed on the upside. KB Home had great earnings, and analysts have upgraded that stock from neutral up to neutral, because a lot of them were negative on there. Look at DHI, DR Horton. You could see the same thing. Now this XHB, that's the home builder index, and so I have that overlaid in here so you could see how these follow the index, and the group kind of moves together. We call that group synchronicity. And look, as it moves up into this 100% confluence area. So strong right over there on DR Horton. I would expect that it would stall a little bit over here based on that, but it's only 4 weeks into this new upthrust, and I would say that that's a pretty good sign that if it pulled back, you could do some buying. Beazer Home, which is BZH, you can see in here as it moves up and towards that fib area also. Note this uptrend that it kept hitting right over here, and then has the upward explosion. These are some pretty big upside moves, so I would expect you'd get some pullback in there. Pulte Home, take a look at this one. Pulte Home was on our list of best 14 stocks for 2017. It's having a great year as it moves up from around 18 up to 27, so that's a 50% gain so far on the year. All of our calls were not that good, but that is an excellent one, so you could see powerful upside move in here, and again, only 5 weeks into that advance, that impulse on the upside, and you could see that, you know, this one moved up 4 weeks, pulled back a little bit, but then exploded. So it's pretty rare that you get that to be the peak. I would say that you could buy that if it pulled back also. And Lennar is the last one we're going to look at in there, and you can see in here this was also on our list of the best for this year, and this one is up from about 43 up to about 53, so that's about a 22% gain. But I don't like it anymore. I think this is the worst pattern of the group, and you can see in there kind of a head and shoulders pattern that's shaping up. So were I to be long this stock as it gets up towards this resistance zone, I think you exit. I don't like that one at all anymore, and has a nice gain in the market. So home builders moving up, and interest rates not bothering it at all, that group. Next thing we're going to look at is one of the driller stocks. Now, like I said, Tuesday I did a video featuring the tech stocks and the FANGs, and on Thursday I did a video where I looked at the entire energy group, 23 different symbols in there, and I think it's very valuable to watch that. So please do. If you're not a member, become a member, and you can watch that video. I'll talk in a few minutes about a special. So the rig is the one we're going to look at, one of the 20-something stocks that I looked at in that video. And this is interesting as it's had a big move. Now, oil's had, a good-sized move into the 51s again. But that might be ready to stall a little bit. I want you to see RIG at here. It has a 9% gain on the week. So energies were overall firm to strong on the week, and Noble Corp, the next strong one, NE up about 5% on the week. Now you can see in here that comes right up to that resistance level right there, the 61.8. I think that this is the point where you're going to get some pullback, and you could see our projection in here that suggests that this has just come a really long way in there. I want you to take a look right over here as we look at the daily. See that little orange arrow right over there? That is our option bias indicator. And what that tells me is that it has come to an extreme overbought condition. You can see the last couple days it's kind of stalled by a little bit, and that's part of what we believe is the reason it is going to roll over. So we think we're going to get some pullbacks in here in the drillers, in some of these very extended oil stocks. Watch that video and you'll see it. And then maybe a better time after a pullback, but right now we think they are overdone. Last stock we're going to look at in the best of the week is U.S. Steel. That is X. And this is really interesting. Of course, if investors are able to see well beyond the clouds that are seemingly everywhere and the difficulty in President Trump getting anything done, and they believe in the potential for eventually taxes passing, healthcare passing, infrastructure passing, all of those things somehow coming. It would seemingly take a solid win by the Republicans in 2018, yet to be seen if that can happen, and it might be a long way off. But this pattern in U.S. Steel says to me that, and some of these other steels are looking that way also, like there's something going to happen here on the upside pretty soon if it hasn't started happening already. So U.S. Steel up 8% on the week on a solid gain. This has our colored phasing in there for you to see. So essentially the rising phases are green, the corrective phases are yellow, and the negative phase, there's a couple in there, is red. And what made a red phase was when it broke underneath this support, this cycle low right there. And when we had that, we indicate that, and then we get the big decline. Now, here's what's happening that is significant. I think I'm going to blow this out to a 10-year weekly so we could see something right in here. So these patterns in here, you can see we had this kind of big uptrend going on in there, and then we had a big correction. So this correction here in U.S. Steel gets it down to this 61.8%. right there. So in other words, it gives up 61.8%, or the golden ratio, of this move right in here. Elliott Wavers might call this a 5 count in an ABC correction. And then we had this kind of flag going on, this kind of little broadening pattern we had in here. And now we have built a base, essentially. And that base is important to look at, because what happens is that when you get a big decline and then you get a bounce, if it were still negative, somewhere in here it would have broke under this level, and the flag would have been broken and it would have moved down to a lower low. But now what you can see it's done, and that's the value of cyclical formations, is that this is one of those right-hand translations. In other words, it moves up for about 80% of the time and only leaves about 15-20% of the time to correct. So in other words, this big downward pressure isn't there anymore. And what it's establishing now is an uptrend. In other words, there is a force in here that's preventing this from going down to that last low that it made around $19. And now you could see this week right over here, we have it in this yellow corrective zone, but that is a bullish engulfing pattern. So that bullish engulfing says to us that the buyers are coming in at these intermediate supports right over there and setting up an upside move. The upside move, based on probabilities, it will get over this 2850 area and potentially even better than that. So this corrective period that we see right in here might actually be bottoming a little bit early and us getting into this rising period right over here. This is the DBB, and often it follows that. So if you want to look at the DBB pattern, you will see how that shapes up. I'm not going to put that up now, but I'll show it to our subscribers in the next week or so. And this period that we're moving into should be quite bullish in there in U.S. Steel. Take a look here as we look at that same thing on the daily, and it looks to us like you could see this kind of broadening pattern right in here, that we're in this rally right here. So the question is that bottom made based on that weekly engulfing? I want you to note that it comes down to this 89-day moving average and then kind of hits the bullseye above that cycle support and then starts to move up. You could see these 5 days right in here, buying coming in every day. This is probably what it's going to do. Get up a little more, pull back a little more, and the timing is right over here for what was likely to be a good opportunity. So if the low isn't made, sometime in mid-October is the time that this buying comes in. I'd buy it now. I'd add to it, actually, as this looks like an absolutely great pattern. I'm loving U.S. Steel, also like Nucor, NUE, and Steel Dynamics as stocks that have, I think, good upside opportunities. So that's a look at the best of the week, and coming up is the worst. All right, for the worst of the week, the worst stock of the week was a solar stock that is First Solar. Interesting about First Solar is that I continue to warn about the valuation in this stock and that it's likely to be a stock that underperforms the rest of the group. Now, there was some news that came out that was helping the solars, and that's the ITC kind of making room for Donald Trump to block or make it harder for imports of solar panels. So the stock gets a move up in the last week, and then kind of the news comes out and the stock not only rolls over but gives us a breakdown warning. So this stock, the biggest decliner and one of the worst patterns of the week that we look at. You can see in here for solar, if you look at cycle theory, and again we're going to talk about a right-hand translation, rallies up for most of the cycle and has a small decline, it says it should rally to a new high, and it does that. Now you see how I mimicked this pattern right over here based on the cycles, the low do right over here. But look, it took out that low right over here. It makes this big evening star. That projects to a decline coming way out here into January. I do not like this stock. For solar, we've talked about the extreme valuation. We've seen downgrade to earnings, PEs in the 50s or 60s, and this stock to me really looks incredibly overpriced. SunPower also to the downside by some 5%, but that one is kind of a cheapie, also not making any real money, and that has a pattern that looks like it might get a bounce soon. So I'd rather own cheapie SunPower or Canadian Solar, CSIQ, than First Solar, which has this horrible pattern. Pandora, this is a really bad pattern also. It's down 7% on the week, and this stock is trying to make a base. But still, it looks like it declines into November. We've been negative on the stock, thinking like, well, the model just has a ton of competition to it. And so they came out and they made a deal to sell some unregistered stock to Sirius. And that, of course, creates dilution, and the stock continues to move down 7% on the week. And that has, again, it looks like a decline continuing out into November based on the cyclical rhythms that we see in there. We could see it getting under $7 again, maybe close to $6, and then maybe you got an opportunity to take a shot on that stock. But overall, it's been a bad pattern, and you can see it's been negative. TripAdvisor, TRIP, that's down about 6%. Interesting background on this. Your favorite TV tout, you might know who I refer to with that, said that he doesn't like it, prefers some of the other online travel companies to TripAdvisor. I think TripAdvisor's got a great service, actually. Whether they can make money with it is another question. And then another side note about it is that there's been a crash in viewers by that company. A lot of people out sharing the fact that it's kind of historic lows for CNBC on the number of viewers that they have there, down to 152,000. That's some pretty low numbers. Maybe that's because there are just so many commentators on the market out there, and maybe it's because people are losing interest. Why do they have to listen to anybody when the market just goes up all the time, right? And of course that might change, but in the meantime they're suffering. And he said that he doesn't like TripAdvisor. Let's take a look at TripAdvisor and see how this is shaping up. I think TripAdvisor is a company that's going to do better maybe a little later on. So it's had a bad week in here, and it's down 6% on the week. And you can see in here that our objective is to decline sometime into the early part of December. That's the projection. If it holds this cycle low area around 35, it will have built a major base. So in the meantime, you got to be patient. Maybe for now he's right. And that would be there's the whole group that we look at there. And that would be an opportunity back then. So right now you can see it doesn't look all that good. But pretty soon it might be better. Next stock we're going to look at in the building material category. Now this is an odd thing because we see home builders exploding to the upside. We see Home Depot scrambling back to a high after the hurricanes created demand. And this is Louisiana Pacific, LPX, that sells stuff to companies like that. And this is a worrisome pattern in here. Really neat. You can see that diamond pattern that formed. Diamonds are consolidations, and that one is pretty clear. And then when it broke out, it moved sharply to the upside. Here is a dark cloud cover, though, in Louisiana Pacific on analyst downgrades. That one is looking questionable, and you can see our projection in there is that that is an important top, and likely that, I think if you had this stock, it makes sense to sell it. Next one we're going to look at is Twitter. Now, I'm on Twitter every day, of course, because it's a great way to communicate with your own network. Share things with them, and we do it all the time. We post our notices when we put up our rankings and setups on there, and I put charts up on there almost every single day. So if you don't know about that, just follow me at askSlim on Twitter. You'll see the stuff we do, and don't forget to become a subscriber on our YouTube channel. Give me a thumbs up if you like what you see here, and if not, if you give me a thumbs down, then make sure you put a comment on there either way, and let me know what you think would be better, what you'd like to see. So Twitter here is down about 4% on the week. Part of this is this probe that's going on about Russia and how they may have used Twitter, and the information that Twitter is going to be going to be asked or mandated to share, and the same issues, of course, going on for Facebook. And the maybe the reason that we've seen these stocks start to struggle is because they may lose control of their company, and maybe ad buyers won't be that anxious if the Fed is able to mandate what happens to the information. There will be less users out there. And take a look here at this stock in here as it rolls over. Note that it gets right up into that 50% fib right there and then rolls over. This looks like it's going to struggle out until the end of November. They came out, by the way, are testing now, doubling the number of characters from 140 to 280. There's some select people out there doing that. not me. And that is probably not enough of a model change to make that big a difference. Some point down the road here, somebody is going to understand that, you know, the hundreds of millions of users on Twitter have value, and they're going to come after this stock. But in the meantime, you can see it doesn't look so hot at this point. So down about 4% on the week. The last one I'm going to show you in the worst of the week is T-Mobile. And this stock in here, when you look at that, what do you see? Well, I think it's a pretty clear head and shoulders. Now, it hasn't broke down, and breakdowns are harder to get on downward sloping necklines like you see here, because it takes a lot of energy to get it down to that neckline. Still, that's a bad pattern, and cyclically, it's a bad message. Why is that? Well, you can see in here, here's a strong stock, right? Bullish cycle, really sweet, right? Bullish cycle. The next cycle is supposed to go to a new high and rallies, and then comes out and makes a lower low. So it gets below this low. There is your left shoulder here and your head. Look at the rally here. So in other words, this rally phase gets stuck in the resistance zone right over here and is now rolling over. That is a sell pattern, and that says the odds are that this stock is in trouble. I think it's a short sale right in here, honestly, and I wouldn't be surprised to see it test the neckline down at 57, let alone breaking it and hitting the projection down here at 48. So this is a really bad pattern, and so what I essentially saved is T-Mobile, only down 3% on the week, but in my opinion, one of the worst of the week. That is our worst of the week, and we're going to be right back with our short-term view for the coming week. All right, short-term view for the coming week. Do this every single week where we look at only the short-term charts, the daily charts, and give a sense for what we think is going to happen in basically the next 5 or 7 days out there. Tough challenge when you look at us doing this, especially when we look at the stock market. We always want to be accountable to how we do. We try to get to 60-65% right, which is about 2 to 1, 3 to 2 or 2 to 1 being correct. If you can do that and trade properly, you're going to make a lot of money. And overall, this week, we're going to give ourselves, well, a 50%. We basically did not get light crude correct. We thought it would get over 51, but we thought that it was going to test 49.25 and be kind of stuck in that range. It never really did get that low, and we thought it would be more of a narrow week, and it had a big Monday, so we don't get any credit for that one. As far as the dollar goes, it jumped a week ahead of the time that we thought it was going to jump, so that made our analysis skewed. That was because of the response to the tax plan, which broke the bond market, like I said earlier in the show, and that the dollar responded being stronger. We thought gold and silver would bounce and then retreat. They exactly hit our levels that we were expecting. I'll show you that. We thought the bond market would get some upticks and fail because we were very negative on bonds, and that's exactly what happened. We thought the stock market would have a dip, the S&P 500 to 2483, and then have a bounce. Well, it got to 2487 and then bounced. The only thing is, it bounced further than we expected, and we did not think that the bounce, was going to hold through the end of the week, and it actually did that. So we only get about half credit for the stock market. That gives us a 50% on the week. So now we're going to jump in and look at the light crude market and forecast for the coming week. So a few things to look at in here. The first thing we're going to look at is that our option bias indicator on 9/26 said it was extreme overbought. You could see that right there. And our level 3 and 4 members were sent the notice of that happening, and you could see that it stalled out right there. It hit the 78.6% fib extension. That level was at around 52.60. We thought it would get stuck somewhere under 51, under 52, just over 51, and roll over. over. You can see that cycle peak resistance about 51.20, but we had that big up day on Monday that you can see really clearly in there. So when you look at this pattern in here right now, the way this shapes up is that, well, we expect that we're going to get a small week. We think that in 2 weeks it'll be able to start to pick its head up again, but we're kind of looking for, you see the cycles in here, the rally, sell-off, rally, sell-off. That's this right in here, and then the rally, and now it's in this sell-off period. So you can see our projection right in here. We're really looking for a small down week in light crude, and then be able to move to the upside again. Momentum in here. Now you'll notice these four days in here where it kind of reversed and came down. This is significant, and that is you could see momentum in here in light crude is positive, and you got the projection oscillator coming down to oversold, and then when you get that, normally when you're likely not to get much on the downside, and if anything, try to get some bounces again. So this whole reading in here, when we look at that and this cycle pattern, says we might try some small little bit on the downside, but basically narrow range that we see in there for light crude. Now for heating oil and gasoline, we have an oversold condition in there, /HO, and that you can see oversold and green, in other words solid upside momentum. That says you're likely to get some bounces in there, and you can see in here that you actually in gasoline have turned red, and that oversold, you're likely to get some little bounce in there, but gasoline overall does not look in very good shape. So I wanted to just show you that we're basically on a very short-term basis oversold in those energies, and it's likely to keep any move to the downside small, and that's why we're looking for basically a narrow range. So the dollar last week we thought would move down for about 3 days, maybe 4, and then get a rally. And that pattern turned out to be different because as this news of the 15% tax rate for repatriating funds came in, that broke the bond market, because it would mean sellers in bonds, and that gave a lift to the dollar. And take a look here at the short-term pattern. The way the pattern laid out was that we thought that this upturn right in here would come this week. So in other words, one more few days in here down and then up. We thought that the euro currency would be opposite to that. But what can you do? It came a week early for us, and you can see it following the pattern nicely. Intermediate patterns, very negative. This bounce in here, well, maybe it could get up to 94. That would not be ridiculous at all. We kind of think that we're going to see the dollar try the upside a little bit in here and then start to roll over. So kind of a small week based on that. Maybe a little up, a little bit down. Slim ribbon turning positive, momentum in there. All of those things are favorable. So we don't see much in there, just a small week with a little, kind of upward bias in there. We think it'll try the upside and not be able to get very far. Note in here that the first time in about 8 months we have positive momentum in the dollar. So that is also going to help as far as the dollar goes. When you look at the euro currency /6E, you can see in here for the first time in about 5 months you have negative momentum. So these things are changing. That's we believe that the euro might come down a little bit this week, but then try to bounce again into this area before it then accelerates to the downside. Now I want you to note the head and shoulders top that's formed in here and the neckline breakdown. Eventually in the next couple of weeks we're looking for 116.70 approximately as a downward target. So for this next week that's coming up, we kind of see just this kind of choppy action in this area, but then after that rolling over. So there's some risk out there in the euro currency. And if anything, we think based on this pattern, the bias would be to the short side. So overall, that's the pattern. The euro currency really with this momentum in here turning, as we said, to the negative side, you've got to be cautious that it might have some, very little to give you on the upside, and then turning over. Next one we're going to look at is gold /GC. So gold, we said, would bounce to about 1318 to 27, but we thought it was going to have some risk after that. We weren't sure about the bottoms in here, and we still don't have a lot of clarity. We have a couple scenarios in there that are neither of them are very bullish for the moment, for the short term. So we thought it would get right up here, and you could see it got right into that short-term resistance there and then turned down. We see a small bounce potentially coming in here, and you could see our little dotted projection right in there. This is very ambiguous analysis in here because to us it's not clear. This decline came further than it should. In time-wise, that's a negative occurrence. So even if it does get a bounce, it's not likely to stay up, and it's likely to roll over and give you another move into mid-October to the downside. So we're going to call this a small bouncing week, that it rallies into the slim ribbon. You see this blue line right there? That's about 12, we'll call it 1290 to 1303 or 4. That's really the slim ribbon is the area that we think it will bounce into and then not be able to really hold much gain. We're going to look for only narrow weeks in there as the dollar digests some of its upside move. Take a look at the momentum in here, and you will see that the momentum is negative in there, and if it, you got a bounce in there, it's going to get overbought on the projection oscillator, and it's going to be red, so it's not going to let it go very far. You can see a similar occurrence back over here, where the momentum turned red over here. You got overbought, and then it turned straight down. So if you get this, a little bounce going in here, this is going to get overbought. You're going to be in negative momentum, and you're going to get the same thing, a move to the downside. So gold looks short-term risky. We're going to look for bounces that fail only into the slim ribbon. The same thing over here on silver, a bounce to maybe just over $17 into the slim ribbon and then turn over. Note that it got overbought in the red, and that's a problem. Now look at the projection oscillator down here. This is pretty close to giving a buy signal, and you might get that in the next couple days. If you do, you're going to get a bounce in market from market forecast. So that's something to keep your eye on in silver. That would help it get maybe a little bit of a sharper bounce. But based on this pattern, you can see, and again, ambiguous because it came down so far, we're kind of looking for a bounce into the slim ribbon and then roll over again, potentially getting into this area of the short-term resistance. And only because of that market forecast reading are we giving it any credence for any significant upside bounce. We'll just call it into the low $17 area for a bounce that likely will not hold. So that's a look at the silver and gold market. Bond market, we were negative in. We thought that the bond market, we would see a bounce in there that failed, and that's pretty much what we got. A bounce here early in the week, and it rolled over. We thought that any rally was likely to be a selling opportunity, and this still is negative. So we're still looking at rallies to fail, a downward trend, and that looks pretty significant. I don't even know if it could get up here to this declining resistance level up there, about 126.11. That would be almost a point rally in the ZNs, and I can't really see that. Maybe you see the slim ribbon, which supported it all the way up, now being the resistance. So maybe you get a bounce up into the slim ribbon there also, and then I think it rejects and then moves to the downside again. And so I would say that you got to just look for opportunities to sell in the bond market. Take a look here, and you could see this negative momentum is pretty solid in there. And again, you have a situation where market forecast is close to giving a buy signal, but it is not there yet. So you might want to keep your eye on that. You could see the 30-year bonds in here. Also a similar situation, likely to give you a little bit of a bounce, oversold for sure. Market forecast right over here actually does give you a buy signal right there. So that says likely to get a bounce in the bond market, and that says that it will be likely to get up to that slim ribbon area, and then I think that it rolls over and gives you a pretty good selling opportunity. What would that level be in here? Well, probably somewhere around 154-ish or something like that. If we got a good bounce into that area, you can see the trend still is sharply lower, and we think it's going to continue moving to the downside. So rallies likely to come, and they fail, and that's not a very, very good picture when you look at the bond market overall. Maybe a little oversold, market forecast saying you get a bounce, but I am certainly suspicious about any rally being able to hold in any significant way. So the stock market, as I said, has been choppy, and choppy on the upside as it, has a dip and the buyers come in, and seemingly there is no real selling out there, and buyers in the third tier of the market as they're buying these low cap stocks. We said for the stock market last week that it was likely to be choppy with a downward bias. That was not right. The downward bias only was early in the week. It missed our target on the downside in the S&P 5, only 4 points, and then turned up. We were suspicious of that kind of a pattern, but it got up higher certainly than we expected that it would right in here. So here is the pattern that we're looking at. There are several cyclical patterns that we're looking at. What's really interesting right in here is that there's some synchronicity of patterns coming in right in here. In other words, all of these lows, that points to right over here. That makes the odds very high that we're going to have a down week coming up right in here. A down week is our projection. Now, our target for last week was 24.83. This was 24.87 on Monday morning. That was all we got. So it was this pattern in here, and then the next rally. So that's this right in here and the next rally. The pattern was correct. The depth of the decline and the amount of the rally was not. So we've moved up now to close to this 61.8% fib extension. And that is a spot where we're likely to run into some trouble right there. So we're going to look for a decline this week, and our projection is to this area down right over here, 24.94 to about 24.87, into that short-term support. There's a little minor support over here, but I have some doubts that that's going to be meaningful. So we're going to look for a down week into that area, and that looks like about 3 to 5 days. So if we get some sharp declines early in the week, then it's probably going to pick its head up again, as we probably can get a only about 4 days based on this counting here to the downside. So this looks like a down week in the S&P 500 as we look at that. Take a look here at this, the combination of what I think is the greatest combination of short-term indicators you can have, and that is the slim ribbon and the momentum index right here paired with the projection oscillator, and you've got an overbought situation that's pretty significant in there that calls for a pullback only. It doesn't say anything really that negative. When I look here at the NASDAQ and the X, you'll see in here that there is similar pattern as that we're looking for a down week in here to follow these patterns, as this minor cycle seems to be lining up pretty nicely with that bigger cycle. So we're looking for a decline in the NASDAQ for this week. Take a look at the momentum in here, and you can see that it's only neutral. So the NASDAQ, which gave up its positive momentum, has not restored positive momentum yet, and it's gotten overbought on the projection oscillator. That says to us that it's likely that the NASDAQ, which spurted pretty well today, is going to give ground and have a down week also in the NASDAQ. Take a look at the Russell in here. So here's the Russell. You could see, man, did it explode. You could see it certainly moved up. This is the furthest price-wise it's been from the 13-day moving average in all of this 6 months. That shows some extreme overbought situation. And if you look right over here at our option bias indicator, it is saying extreme overbought condition right there, and that says likely to turn down. The cycles in here a little different. In other words, it's calling for some couple 3 days on the downside and then move back up. So we're going to look for that kind of a choppy week. I wouldn't be surprised to see a 20-point down day in the Russell this coming week, and then find the buyers coming right back in. We would probably project the Russell down to about 1470 or lower in here. This price here is 1455, so it's 1470 or 1455 on the downside in that area, and then likely getting a bounce again. Extreme overbought condition in the Russell as the buyers came in there in a massive way because they are just anxious to own those cheap stocks they think have been left behind. So that is it. That is our show for the week. A very significantly overbought situation in the stock market that should bring some declines, and overall lots of, I think, valuable information for you. I have a special going on right now. If you would like to get all of our videos, you can get those for half price. If you want our rankings and setups, the same thing. Or if you want our charts on your TOS platform, just send me an email to slim@askSlim.com. Ask me for that special link, and I will send you that link, and you will be able to see all of this amazing work for just a crazy low price. So in fact, you could watch all 250 of our videos, learn a ton for a whole $16.50. How can you not do that? So if you're a new trader just learning, well, it's a great opportunity. Follow me on Twitter at askSlim. Become a YouTube subscriber and be notified of when any of our videos come out on YouTube. That is it for this week. You have a great week. Be careful out there because it is so crazy. And I'm always wishing you great trading.
Well, I'm going to sit and I'm going to do a silly show.